Yep.
Let's shift now to the markets on the last trading day of the year. Investors heading into 2023 with a lot of food for thought. Here to discuss, we've got Brian Vendig, who is the MJP Wealth Advisors president. Great to have you here with us. If there's one big theme that you hope we leave behind in 2022, and perhaps one that prevails in 2023, what would that be from your purview?
Good morning, Brad. I don't know if we're going to move past the theme of what the Fed is going to do when we turn the page on 2022, but I still think that theme is still going to be the dominant tune in 2023, which is what's the Fed's view on inflation? Are they doing enough? Are they doing too much to fight inflation at the risk of driving the economy into a recession? And I think right now, most investors have more of a pessimistic view going into next year that the Fed is pushing too hard on the brakes with these interest rate increases and not taking into account the $1 trillion is going to be rolling off of their balance sheet over the next 12 months. So I think we get to the end of January, we'll start to hear Fed speech again about interest rates and outlooks. And when I look at the market estimates, it seems like most are expecting the Fed to change its tone or ease back on rates in the middle of the year next year, because there's a higher probability that's growing that the U.S. economy will be slowing and maybe we will have a formal recession declared. So I think in the short term, over the next couple of weeks and definitely throughout the Q1, you're going to hear the same story as before: volatility in the marketplace, be concerned about multiple compression in high value stocks, and look for companies that can help to support free cash flow and dividend growth to kind of move through some of these uncertainties in the short term.
Brian, the stocks that have been beat up this year, and I'm looking right at big cap tech, do you buy those in January?
Brian, I still think it's a little bit too soon to talk about tech stocks. I think they are definitely attractive, especially some of the large mega cap tech stocks for sure. A lot of the problems and concerns and valuations have been priced in some of those, especially in the consumer discretionary space. But knowing the fact, and even look at the month of December as an example, when we saw interest rates tick up on the 10-year Treasury, we see the NASDAQ and tech stocks trade down. And I think that's the concern, because we still know that the Fed is going to increase rates somewhere between 50 to 75 basis points at least next year. And also still talk about the story of where we are with inflation in the labor market, which again causes issues from a valuation point of view. So I would still tilt clients' portfolios and still consider our audience to consider dividend payers, the energy sector that has a high free cash flow yield, and also looking at companies that are going to help to solve the European energy crisis, and also still think about maybe even financials and consumer staples, as a means of kind of working through this. So I still like tech from a longer term point of view, Brian, going back to your question, but still being a little bit cautious over the next 3 to 6 months.
When you speak to your own clients and the people who are asking you questions about what they paid the most attention to in 2022 that perhaps they don't need to in 2023, that's just really something that may be a sideshow. If I'm crafting my own investor New Year's resolution not to pay attention to one thing in the market, what would that be?
I would say let's stay away from things that feel like speculation. I think a lot of clients, heard about things that, seemed attractive, saw some historical numbers that ran up and were intrigued by those things, especially when you look at the declines of some of these assets from their 52-week highs to where they are now. I think moving forward, clients have digested this adjustment in valuation in the market and coming back to the reality that fundamentals do matter when it comes from an investing perspective. So focusing on things that can help to support income generation. We're getting more on cash. Short-term treasuries look attractive, short-term municipals, dividend payers. And again, staying away from things that seem a little bit too good to be true. And let's focus on the fundamentals for the balance of the year.
Good words of wisdom. Brian Vendig, MJP Wealth Advisors president. Good to see you. Happy New Year.
Happy New Year.